Hey investors, welcome back to another episode of vishalvealthview. We are almost halfway through 2025 and past 6 months has been nothing but chaos for me in terms of investing. If you see the beginning of this year, Trump was introducing a tariff war on the entire world, and then it got escalated into a full-blown US-China trade war. As I was navigating through it, we had a terrorist attack in Pahalgam, and then there were things escalating in South Asia between India and Pakistan, two nuclear-armed nations. So among all these moving pieces, I was trying to navigate how should I steer the course of my ship for my portfolio. And in today's episode, I'm going to talk about the changes that I have made in past 6 months in my portfolio. And if you want to see how was my portfolio at the beginning of this year, you can click on this card over here. I'll attach a link so that you can understand how my portfolio changed over time. So without wasting much time, let's start this episode. But before we start this episode, investors, I'm not a financial advisor. So please invest your money after consulting with a financial advisor only and don't consider my advice as Lakshman Rekha. And secondly, if you enjoy the content that I'm creating and you find this video useful, then like and subscribe this video because that's the only way YouTube algorithm will push my video into more users and my channel will grow. So without wasting much time, let's start this episode. First, let's start with the mutual fund investment. So, over the course of time, I've been building this mutual fund portfolio right from zero. It has been 5 years now since I started investing in this mutual fund portfolio. In the initial phase, the gains were not so significant, but as I kept on investing and I was a big time holder, the returns were visible. Most of the returns that I made was in the second bull run that happened in 2022, 2023. In the mid cap space, I was having a decent amount of mid cap holdings at that time. So my portfolio was almost up to 82 lakhs. My mutual fund portfolio. And after that, from September, we had somewhat of turmoil, and investors start taking money out of Indian markets, specifically FIIs. That's the time I saw somewhat of corrections in my portfolio, and I moved some money from one place to other place, from one asset class to other asset class. And this is the current state of my portfolio. We are almost about 80 lakh, and some of this capital I've also rotated into my stock portfolio. So let's deep dive into the mutual fund portfolio. What are the changes that I have made with respect to the beginning of this year? So I've been consistent investor in Parag Parikh Flexi Cap Direct growth. This is a good mutual fund. It has a low beta and high alpha. That means during the market downturns, it's not falling as much as the indexes are falling, and it's able to beat the index on a regular basis. Uh, Not highly consistent though, but it's a reliable investment for me. So that's why I'm keeping some amount of money in this. This acts as a low risk investment, low risk equity investment for me because the investors are like not the investor, the portfolio manager in this particular scheme have a philosophy of only investing in cash flow positive companies. Then comes Parag Parikh ELSS Tax Saver Fund. This is an investment that I had to make. This is an investment I had to make because of my tax saving scheme and ATC. So I have to hold this investment for almost 3 years. I'm not planning to change it. Then we have Quant Small Cap Fund. This is just an experimental investment. I'm only investing a small amount of money. I don't completely align with the philosophy of this mutual fund house. That's why I'm just waiting and watching how my returns would turn out to be. Then we have Mirai Asset Nifty Small Cap 250 Momentum Quality. Uh, a large chunk of my money was sitting in mid cap funds, specifically Mirai Asset Mid Cap, which was not able to beat index at that time, which is mid cap 150 index. Hence, I decided I'll take that money and swing it into small cap index, and that's why I migrated all that money or shifted all that money into this asset class, which only invest in 100 small cap companies based on momentum factor and quality factor. And along with that, some other mid cap investment I had was SBI Magnum mid cap and Axis mid cap. In one of my analysis, I realized that these indexes were not beating the benchmark, which is SBI mid cap 150 ETF or index, and that's why I migrated all of that money into this large cap index as well. So if we see the allocation and what's the distribution. Most of my fund, 100% of my fund is in equity. Now, this does not mean that I'm not holding any amount of emergency fund. I do have emergency fund in my personal accounts, but right now I'm more risk averse. That's why not risk averse. I'm open to taking more risk because market was really pessimist, and hence I'm investing 100% of my capital in equity rather than keeping some amount of debt. If you see my portfolio at the beginning of 2025, I was holding almost 20% cash in this portfolio, and over the course of last 3 months, I have migrated that cash into right equity holdings. If we see sectoral distribution, I think my investment has been distributed across all sectors: financial, technology, consumer, which are like fundamental backbone economy, which serve as a fundamental backbone of our Indian economy. In terms of company, I think 3% is a normal allocation. I don't have a fear about it. I think my portfolio is pretty much diversified in terms of mutual fund. Now let's take a look at stocks. So talking about my stocks portfolio, my primary holding is in ICICI Prudential Mutual Fund Momentum 30 index. Now, this is a collection of 30 stocks that are observing highest price volatility or maximum run up in last 6 months. And this index is only created on the basis of absolute return of a stock. It does not consider any fundamental aspect of the stock. I was sitting on a loss in this investment for almost 6 months. I was sitting on a loss of almost 25%, 30%. But now my losses to some extent are recovered because I have been doing downward average as well, and also booking some amount of losses to migrate that money into some other places. Same is the case with small cap and Kotak Nifty Alpha 50. Small cap is the same index that I'm also investing in a mutual fund, which is Momentum 100 and Momentum Quality 100, Small Cap 250 Index. This is a collection of 100 companies which have highest momentum factor and quality factor in Nifty Small Cap 250 space. Now, this has also observed a decent amount of correction, and I was having or making downward average while there was a stock correction going on in this particular asset. So that's why now my losses look significantly low right now, but I was sitting on a decent amount of loss in this investment back in March. Then we have Kotak Nifty Alpha 50. This is a collection of 50 stock in entire Nifty 500 space that has the maximum alpha factor. Again, this index has seen some run up and rebounding. Otherwise, on this index, I was also sitting on a loss of almost 25-30%. Next, we have Motilal Oswal Nifty India Defense ETF. Now, this is an asset in which I was not investing at the beginning of this year. I was aware about the potential of investing in defense companies, but story became more strong during last 3-4 months. The reason being, as soon as Trump started trade war in US, I migrated some amount of my capital into this index at the beginning of April, and like just before the reciprocal tariffs were announced. Now, this is also accidental luck. I did not plan it out. I was just trying to hide away my capital from US equities into some domestic Indian investment that will not face repercussions of trade war. And defense seems like a valid use case for me because we have to invest in our defense in a self-reliant way. And government was pushing more investment in this direction. So that's why I decided to park my money over here. And since then, there was a Pahalgam terror attack, and India, Pakistan saw a decent amount of escalation. And the results of that escalation is in front of all of you. Like Indian weapons performed really well. We were able to hit multiple Pakistani air bases and able to protect our air bases. Hence, the defense and offensive capability of our defense industry was showcased. Hence, I increased my investment in this particular direction even after I saw a decent amount of run up. And the question is, what's my strategy with this investment? So, from a 2 year, 3 year horizon, I think this investment is a valid investment to hold. I agree that the valuation of this particular asset is relatively high right now. It's trading at a PE of 52. But I do believe turmoil in the future is going to increase, and we are a country that's still not exporting a decent amount of equipment to the world. Our Exports are not even crossing like 20, 30 billion right now. We have to come into top three, four players if we are top four economies. So there's a lot of room to grow. So I'm planning to stay invested in it, but not by uh, in a uh, in a greedy way, which is bulk investing. And I'm planning to keep my investment less than 10-15% of my total portfolio in this sector. Next company in line is Suntech Reality. Now, this is a small real estate company based out of Mumbai. When I say small, it's a billion-dollar business, and they're expanding in Middle East. They're expanding in some parts of Maharashtra, and I've been holding this investment for past almost 1.5, 2 years, and I've not made significant gain in this investment. And the amount of money I've blocked, the opportunity I've blocked, is also relatively high. So in today's episode, I'm also going to reassess my investment using Nifty GPT, trying to understand what are the risk of this. So I'll add Suntech over here. Uh, I see you're looking for Suntech. So let's ask what are the risks involved with this investment. So I have been holding this stock for almost 2 years now, and I want to see does it make sense for me to hold this or just churn this or cut this position. So let's ask what does Nifty GPT thinks. So as you can see, the key risk in Suntech has been high debt level. Now I don't think this debt level is relatively high because this is a more than 5,000 crore market cap company. So the debt is moderately low. Sector volatility, I agree, real estate is a cyclical sector, but the company has good fundamentals, so I'm not worried too much about it. Execution risk always remains a valid concern. Market concentration is a valid problem because this company is not planning to expand out of Mumbai right now. That's what the CEO of the company is thinking. And the philosophy of the CEO is that Mumbai is a really big market for me to capture before I go out of Mumbai. There has been some amount of dilution in promoter holding, as per latest reporting, and there are always regulatory risks. But I see the regulatory risks such as RERA being helpful for companies like Centec because these are the only few valid players, valid or authorized players in the real estate market that don't deal in uh, cash, and that's a good thing for them because they can operate without black money. As you can see, the sentiment on this particular stock in the market has been relatively bullish. There is no negative news coming out for Suntech in past few months. Let's take a look at what is the Nifty GPT recommending if I should hold this or sell this. So if we see the fundamental outlook of the company, the sales has been growing almost by 40% in last quarter, with indicating strong demand. That's a good thing. The margin has been improving as well. The valuation is trading at almost 2 times book value, which is not high. The debt has been reducing for the company over past 3-4 years, which is again a good sign. So there are multiple catalysts involved or tailwinds involved for the growth of this company. However, the risk still lies with high inventory still remaining with the company and not being sold. This is because of the high cost of properties in the MMR region and the Mumbai region. Even though they have inventory, if the buyers are not willing to pay the amount they're asking for, their inventory is most likely going to remain unsold. But this is something they can work on by reducing the cost as they have high margins as well. If we take a look at trend, the currently it's trading above 200-day moving average, indicating a positive long-term trend. So according to this, I think we are in an upward trend as per the technical analysis, and the support level is also has also been crossed for this particular investment. So it's recommending that we should stay invested in this particular company for some amount of time to see if there is a if the stock is able to hit resistance and then take a decision after that. So that's why in this particular company, Suntech, which is part of my portfolio, I'm owning almost 1466 share. I'm going to hold this investment and not cut it or chip it right now. Let's talk about our next company. It's called Varun Beverage. Varun Beverage is a PepsiCo bottler in India, Africa, Sri Lanka, Nepal, and some other countries in Africa. Now, if you see my story, I got a early entry in this particular company almost in 2021 or 2022, if I remember correctly, and 2021. And I've been holding this investment since then because I believe it's a long-term consumer-oriented growth story because India is a tropical subcontinent which faces almost 3 months of extreme heat, and water and sugar are two components that humans need, specifically when they don't have enough food to eat and they're looking for cheap calories. So that's why I'm invested in this particular company, and it has been observing a decent growth specifically because of its latest product called Sting. So let's try to understand, does it make sense to remain invested in this company or make a change? So I'm going to ask Nifty GPT what are the risks associated with Varun Beverage in the recent time. Now I know this company is an investor in Africa. That's why I want to understand amid the tensions in Red Sea, what are the impact on its business or specifically its Africa subsidiary. So let's try to understand what are the uncertainty for this particular company. So, as it says that Varun Beverage faces logistic costs due to Red Sea tension, affecting global supply chain, and trade war could lead to higher import and export tariff. What percentage of sales of Varun Beverage is coming from non-domestic market? So I want to understand how much sales for this company is coming from export-oriented market or other companies, so that I'll have a ballpark figure. Okay, what's the sales number on which we can see an effect because of this ongoing trade war or conflict in Red Sea? So as you can see, Varun Beverage has almost 15 to 20% of its revenue coming from international market. That means only 15 to 20% of money which is coming from Nepal, Sri Lanka, Morocco, and some other countries in Africa will be impacted. Now, if we consider the entire trade route between the Red Sea, I don't think this company is going to be highly affected by it, but it will be affected by it. In terms of raw material of cost, if the energy cost increase, this company will directly be affected by it. And to some extent, if the cost of water, sugarcane increases, this company is going to be affected by it. But I don't see a direct impact of trade war in one-to-one fashion for this company right now. Now let's talk about our next company, which is Tips Music. Now this is a music label company. They operate in a simple business model. They purchase music produced by artists, and they have a royalty on that particular music, or they can get royalty on that particular music for multiple years, or almost 50 or 100 years. And that's why I think this is a good ROC business. Once you are able to buy a particular music, a particular song, you can encash it using ad stream revenue for multiple years on YouTube, on Spotify, on Amazon Music. As of now, the digital penetration in India for music is not high, and as internet becomes more cheaper, people have more access to smartphones. I believe this particular investment and this particular company is bound to profit in the future. That's why I have invested in this company in last year. I remember almost 2024, June 2024. I've not seen any growth in this company in my investment till now, but I'm hopeful and I'm planning to hold it for another 1 or 2 years. Now let's talk about Anant Raj. Now I've been a investor in this company since last 1 year, and I got interested in this company because of their data center story. They are a real estate company mainly operating in North India, but they're venturing into data center business. Now I think we need a huge will have a huge demand for data center in future, and that's why I was interested in this company because they already had a decent amount of land bank on which they were constructing data center. They already have a data center operational in Manesar, and they are planning to expand to almost 700 megawatt capacity up until 2027. So, in terms of what am I going to do with this investment, I'm planning to hold. I'm going to wait and see for this year if there is any change in the story, if they are able to commit to the sales number that they're saying in the quarterly transcript, and if not, I'll probably take a break from this investment. But right now, I'm planning to hold this company. Next we have is HDFC Bank. Now both of these investment, HDFC Bank and Ujjivan Small Finance Bank, I think I'm slowly cutting these positions. If you would have seen in my past video, I was holding more capital in these positions, but I've cut down these positions as they have been rising and moving this money into other places, which I think are more suitable for growth right now. The reason I'm doing that is I don't see a 70%, 80% run up in a company like HDFC Bank because it's a really large company. And with respect to Ujjivan Small Finance Bank, Ujjivan Small Finance Bank is a small finance bank business. They have high profit margins. They have relatively higher NPA with respect to larger bank because they are giving loans to weaker section of society or unfulfilled section of society in terms of credit. That's why they'll always hold more risk. And talking about the last two, Mirai Asset and ETF and Motilal Oswal Nasdaq 100 ETFs. Both of these are US tech heavy indexes. I swinged my money from these indexes in last 3 months because I wanted to book some profit and I did not align with the story that was going on in US, China and the trade war. I was not sure how these tech investment might change in future. And with high valuation of these indexes, I was like not even comfortable holding them. So I cut down my position almost by 60%, 70%, and I migrated that money or moved that money to Motilal Oswal defense ETF. And I think that decision was to some extent correct because this has seen a decent amount of bull run. And that's it for today's episode, investor. I hope you were able to learn something from this video. Please hit the like button if you enjoyed this video because it will help promote this video to more viewers and subscribe to Vishal Wealth View. Bye bye. See you around.